Welcome to the Market Momentum tutorials. This is number 4. There's a total of 8 plus 1 extra on the Live software. This one's on momentum gaps. And when you watch all of these, please come to the website and watch the video reports. You'll learn a lot more from that, and you'll find trading levels that you won't find on normal charts.
Welcome to the tutorial on momentum gaps, inside momentum days and inside outside momentum days. This little picture here, it's quite old but suits the purpose. We have an inside momentum day here. This is a normal momentum day. Now if you watch the video on momentum ranges and diffs, you will know what this all means. The zero line is neutral, it has a value. And this is the momentum low range value, momentum high range value, and the swing value where it closed. And you also know that the two dashes are the next 2 days based on an unchanged market. So assuming the market opens unchanged the next morning, it will open with its dashes, and you have a momentum gap up to that low value. Conversely, it could work the other way, but in this picture it's an upside momentum gap. And of course the market could open already up there the next day on the opening, or even lower down, and it could open with the gap filled already, or with an even bigger momentum gap that's been shown. And we have some examples for you. This is the FTSE future momentum range chart on a daily basis. It's a candle chart. I normally look at Bones charts, but for this purpose it's easier to show momentum gaps. Let's just zoom it up. Now we're looking at this with the momentum trend line here. This particular day was the blue bar was the 12th of August 2010. We had a market range that day of 52.67 to 51.97 with a close at 52.59 rather, and that gave us some calculated values for the next day. It gave us a neutral value of 52.47.5. We had a high value here of 52.20, a low value of 51.51, and a swing value of 52.12. Now the swing value on a candlestick chart is where it closes, which on a blue line is at the top, on a red line is at the bottom. In this case the swing value is here, and it was 52.12. Now the market opened up here plus 44 ticks over neutral at 52.91. That gave us almost a 70-point momentum gap back to the high value. And in fact, a friend of mine rang me up and told me he'd sold this. I missed this particular trade. I haven't forgotten it. He sold on the opening. It was a pretty fast trade. It slammed down, filled the momentum gap very quickly. You would have covered your position in just above the momentum gap at 52.20, so you probably bought it back at 52.23 to 25 area, because we normally buy it back just in front of the momentum gap and then try and buy it on a dip below. In this situation you buy it when a high value is taken out and there's a momentum line. The momentum line should hold, and in this case it did. The momentum line was pretty much where the swing value was, 52.12, and you would have bought it back there, and you may well have gone long with a short stop because it was a perfect trade for a long with a momentum line that should hold. It did exactly what it should have done, and you could have resold it back up at neutral again, or indeed held it for the rest of the day, because at this point I believe the diff had turned up. So that's a nice example of a momentum gap trade. Here we have another momentum gap example. Just to let you know, by the way, there's no neutral value on these range candles. You need to look at the bone charts for those. We can't physically do them on the candle charts. Now T-bonds are priced in 30 seconds. 09 is the high value, for example, for today. And you can calculate that into decimals at 132.27.9 divided by 32. I'm going to talk about it in decimals. This is a more recent one. I traded this myself. I can tell you this is the 27th of October and the 28th of October. From this day's range, we had calculated values um, of a neutral for this day of 130.44 decimals. There was a high value here of 129.63, low value of 128.54, and a swing value where it closed down here at 128.25. Now the market opened at 129.28, which is 129.88 in decimals, had a 25 tick momentum gap. However, it didn't fill it. It went up to just under neutral in London opening and stayed there all day till about 3 o'clock in the afternoon, I believe, to 4, or somewhere between 3 and 4, halfway through Chicago time period. The market then slammed down, filled this momentum up, going down to 129.56, just below the gap, and then went straight back up again and made new highs and then settled down. Now the way to approach this one would have been to short it in front of neutral, around the neutral area, and waited for the gap to fill, and then covered it and gone long. And the reason you would have gone long on this one, not only was above a 3-day momentum range trend line anyway on its own, you had the diff had actually already turned up on this day, and the daily average was already, differential was already confirmed to turn up because the high value had been broken up on the opening, and we had an ABC momentum wave pattern going on, which you would have been looking to be long for the C wave anyway. And so even if you hadn't wanted to short it because there was a buy trade on the close, you would have waited to get in at the right level. And this low value was actually 2 ticks lower than the previous day's value in the market, not momentum but in the actual market. So it did make a couple of ticks slightly lower lows on that day, and there was a perfect buy area around here with the diffs turned up and looking for a C leg, and you'd have been long this trade for at least 2 days anyway. In fact, it went even higher the third day, and then we had a momentum reversal today. Now I'm going to show you one other thing I'm going to talk about here. I wasn't going to talk about before, is the momentum reversal. We had one here, we've got one here as well. That's when the swing value closes below the previous day's swing value after a high value has been broken, or vice versa if it's on the low, a low one going the opposite way. Here you have a reversal going the opposite way, and eventually led to higher prices, and in this case lower prices. And it's just something to keep in mind. This actually happened to combine with a gap. It opened here at about plus 40 ticks over neutral, went up and filled the gap at plus 95, so there's about 55 ticks profit there, and then you would have looked to short it above the gap, or at the gap, or above into the mom line. The ideal selling point was the mom line, and it would reverse back down again. So there's a couple of trades there as well. Nice if you got those sort of things every day. It doesn't always happen though.